Let me ask you this kind of broader question. What's your base case for the year? So when clients ask you right now, given all the uncertainties, the headlines, what are you telling them?
Well, we're telling them to be cautious because it's a highly uncertain environment where the economic paradigm has shifted to the supply side. It's no longer a demand-driven economy, it's a supply-driven economy. And in a supply-driven economy, you get counter-cyclical forces, higher output and lower inflation when you get a positive supply shock, like Stephanie was talking about on the AI front, lifting productivity growth, but negative output growth and higher inflation when you get negative supply shocks, oil price shocks, geopolitical tensions, the tariffs. All of those factors are influencing how the economy is evolving. And so from our clients' perspective, we're seeing a lot of hesitation when it comes to investment, when it comes to hiring. This all feeds together in terms of how the economy is behaving. And unfortunately, this leads to less investment, less hiring when you have this great uncertainty as to how these supply shocks are going to filter through.
You know, markets this week have been trying to look to the positive, look behind
This has been the
oil
theme,
price.
right? How many strategies, how resilient the markets have been,
Yes,
right?
and look, history has shown us that historically these oil price shocks, these geopolitical shocks have been short-lived in nature. Markets have, operate in a world of long summers and short winters. We want to keep the eye moving forward when it comes to our portfolio construction. We still think that all of that is in place, but environments like this is why investors should have some diversification in their portfolios. You want things that are going to help shield these different shocks wherever they may come. But I think it's also really important to not completely jump ship and disregard a lot of the structural themes that are still in place and that should still drive returns over the long term. And that is where this AI theme in the US, but also globally, still remains quite intact and more resilient than the more cyclical parts of the economy in this scenario.